everyone, John Henry here from School of Trade, and today we're going to be looking for a breakout, in this case on crude oil to the downside. We're starting to get the market structure to really start looking like it's going to be going and pushing to the downside. Every time we try to make a new high, it gets swatted right back down again. Try to make a new high, pushed right back down again. When we finally tried breaking above these previous highs up here, got slapped right back down again. So we definitely have a bearish market sentiment here to work with. So what I want to be doing is looking for a short-term sell opportunity on a breakout right back down to the downside. Now, ultimately, I'm looking to break these lows back here just to continue that market structure that you normally see on the way down in any type of market. So what I want to do is I want to get my orders placed ahead of time, so we'll drop a sell stop limit here. And then what I'm going to do is wait for a couple seconds before this candle closes, get that order a little bit further down. And then we're going to be looking to the downside, and we can place the order right now. 96.88 is going to be the entry short, and we're looking to take this down for just a quick +5, +10 target on the way down. At +5, we're going to be taking 2 contracts off to lock in 10 ticks. Then the stop's going to be moving to break even. Now, the reason we do that is because I want to take all of the risk off the table, right? I don't want to worry about having to say, oh, you know, it came really close, but then it didn't actually hit. And so you take, 10 ticks off the first target, 2 contracts at +5, and it goes right back up again and stops you out, and all of a sudden you're essentially break even. We want to lock in a little bit of that profit. So what we're looking to do here is just looking for this market to give us a little bit of a push down, having a little bit of a hard time getting down there, but we were triggered in at 96.88 to the downside, and then we're just again waiting for our targets to the downside, or if we get stopped out, we'll take a stop out as well. So just waiting for a push down here. Come on, crude oil. And then if we can get that +5 target filled again, our stops will move right down to break even. Sometimes the ATM strategies are a little bit slow to react. So what we'll have to do is just manually move them down. But in this case, it moved right down, got our first target off, 2 contracts at +5 for a total of 10 ticks. And now we were stopped out of break even. So really, really fast trade. It was looking kind of shaky at first, but and that's why we wanted to be careful around this previous swing low, right? This is exactly what we're seeing. We came right back down to the area, and now we're catching a bounce. If we can't close below that, chances are we're going to move right back up again and stay in this consolidated area. But that was just kind of a way to get into a breakout trade sort of preemptively before the actual breakout. A lot of traders are going to try to take the breakout at these previous lows. Well, that's not necessarily the area you want to go for. You want to be a little bit preemptive to that strike. You want it to go a little bit sooner ahead of the crowd. You want the crowd to be helping your position and push your position down. So what we're basically doing here is just took a nice quick breakout to the downside. 2 contracts off at +5 for $100, stopped out at break even, within a 1-minute candle. So $100 in under a minute, pretty solid to me. So that's going to be today's trade. If you have any questions about it, feel free to send an email to School of Trade, and don't forget to check out our trial at schooloftrade.com. Have a good one.